Good morning, class. This is your instructor. Today we are going to be talking about the practical side of cost of goods sold. So, starting with a few questions in this lecture. Today we are going to be doing from the same book that we took up last week. It's Matz and Usry, and it's Cost Accounting, Planning and Control, 7th edition. So, what you're looking at is page 38, and this is question 2-7. Why I have chosen this question is because it has a few aspects that really need discussion. Therefore, what we are going to be doing today is, first of all, discussing about the unknown values that we did in a similar fashion last week, and also if you have any kind of losses, then how you deal with them. So that's going to be another question. Hopefully, be covering in this short span of time. Okay, so now if you just look at this question they've asked you, so first of all what you do is that you go for the required part of the question, and it says that you need to find out about the balance sheet. Now there are two kinds of balance sheets, okay, so if you look at this question, you will see that the first balance sheet is the opening balance sheet, which is actually the previous year's balance sheet, and that was given to you from the start. And the balance sheet that you are going to be making is the one that is closing balance sheet, okay? So it could be therefore December 31st. And now the second requirement of this question is an income statement for the year. So it's going to be for the year 2019 because 20 is still, it's passing. With details of cost of goods manufactured and sold. So now, since we have paucity of time here, we don't have that much time on our hands, I'll be telling you the steps and you can just really find out the unknown values, how you're supposed to do this. But we are going to be beginning with, okay, this is page 38, so let me just repeat this. And the question is, if you look at the question, it says that the balance sheet and income statement, and there's data given to you in this. So on December 31st, the Steel Canning Company with outstanding common stock of $30,000. So now you know that the common stock is $30,000. I'm not going to be writing it right now. You can write aside the data in a column. So they have given you certain figures like cash, 5,000, accounts receivable, 10,000, finished goods, 6,000, work in process, 2,000, and materials, 4,000. These are all opening values. Prepaid expenses, property, plant, and equipment net, 30,000, and you have current liability, that's 17,500. Okay. So now if you look at this, that during the retained earnings account increase. Okay, so now during this year now, the important adjustment here is that they have not given you the retained earnings, and you need to find out some values which may not be possible for you to find out. Like for instance, the cash. If you don't know other values, you cannot find out what would be the closing cash because they have not given you the cash flows which have occurred during the period. So usually the opening cash cannot be the same as the closing cash unless there was no transaction absolutely in cash throughout the year, which is not possible. So now let's just look at the balance sheet. What is usually the format? So you have assets is equal to liabilities and owner's equity. Okay, so this is just a normal thing. So now we can have cash as has been given to us, but this is opening cash. And now they have told us that the retained earnings, okay, so owner's equity or the equity part usually has the retained earnings, and it also has common stock, okay? So now as I've said that the common stock is $30,000. Now, the main equation for retained earnings is usually opening retained earnings. Now, they've said that during the year, retained earnings account increased 50% as a result of the year's business. Now, you know that plus any net income would give you, or less any dividends, would give you closing retained earnings. And you also know that we need to find out the value of net income, because we can't really have two unknowns in this case, okay? So in order to find out what is the value for these aspects of the balance sheet, we need to find out what is the net income, the first thing. So for that, we further read the question, and it says that balance of accounts receivable, prepaid expenses, current liabilities, and common stock were the same. I'll remember this when I'm making the balance sheet, okay? Now, inventories were reduced exactly 50% except for the finished goods inventory, which was reduced 33.33%, and plant assets were reduced by depreciation of 4,000. These were net, so it's going to be, I think, further reduced. And so now these were reduced by depreciation and charged to factory overhead and administrative expenses. So whatever depreciation that you subtract would be charged part to administrative expenses and part would be charged to the factory overhead, okay? So that means the factory overhead, if it's 3 by 4 the factory overhead, so any value of factory overhead would be multiplied by 3 by 4 to give the value of depreciation. So in this case, depreciation is, let's suppose, 4,000. But we are not going to be using this value at the moment, but know that depreciation, if it is given to you as 4,000, so if it is 3 by 4, okay, so it's going to be 3,000. So then you charge this to factory overhead as depreciation. And 1 by 4 in this case would be charged to admin expenses, and this is going to be like $1,000 or so this is charged to factory overhead, and these will be charged to admin, okay, in income statement. But since we have to find out other values, let's see what further. Now sales are 60,000 that were made on account of finished goods costing $38,000, okay. Now finished sales were $60,000. I hope that you can see this. Sales were $60,000 as per the data, and they were made on account of finished goods costing, okay. Remember that those finished goods usually are cost of goods sold. So if they have not given you the value of cost of goods sold directly, you can see that if they say that the account of finished goods, they were completed for sale, and some of them could be reduced further from the cost of goods sold total if some of them were not sold. However, in this question, they have not really given us, as you can say, that they have not given us any condition that this is the value of which is not taken as something not sold. Rather, it is something which is sold. So, as you can see that they have told us that sales were made on account of finished goods. So now they have not said to us that there is some unsold value in this, because they say that sales, they were made on account of finished goods that were completed. So finished goods completed and sales were made on their account. So that is why I say these are cost of goods sold. Okay, and the value is $38,000. So now cost of goods sold was actually $38,000. You may ask, ma'am, they have given us the balance sheet closing finished goods inventory, so you need to subtract this. Yes, ordinarily we would subtract the finished goods inventory from the total value of the cost of goods sold, but if you read the statement, it says that sales were made on account of these goods, valuing or valued at $38,000. That's why I have treated this thing as sales being made on account of this cost. Okay, direct labor cost was $9,000 and factory overhead was applied at a rate of 100% of direct labor cost, leaving $2,000 under applied. Okay, now there is a concept of applied factory overhead and a concept of actual factory overhead. So now first of all, there is something which is known as applied. FOH. Now what is applied? This means estimated. In the beginning, as I told you that for cost accounting, we usually, estimate the budget. So we want funds, right? So what we do is we would estimate the value of the goods that we want, the raw material, the labor, and everything. So we can send requisition for these in the form of funds that we may, later have. How is this possible? Now, for instance, if I am at the start of the year, my university would ask me whether I need stationery to work or print, or to maybe have some toner, printer, and other paraphernalia. So I would tell them that, okay, in the start of the year, that this is my requirement. I need so much stuff, so much stock for me. And then, obviously, they need to give funds to the department. So then we would send them the slip for requisition. Okay, this much stationery is wanted, and then they would release the funds, and then our thing would be actually bought for us. Now, in this case, similarly, in the factory, we have applied. It means that we estimated what would be the cost of labor, indirect labor, direct labor, utilities like electricity, insurance, taxes, supervisor salary, things like that, like factory overhead, manufacturing costs. So when we estimate them, they are known as applied factory overhead. Now, the actual factory overhead might actually vary, because it may happen that I got this whole rim of papers, so I had maybe 500 papers, but what I actually spent was 10 papers out of that. So that means my actual factory overhead would be different from my estimated factory overhead in this case. So now the actual factory overhead is what you actually incurred. What expenses? These are factory ones, okay? So factory expenses actually incurred. So that if this is subtracted from applied, and if this was greater than this one, so now if the answer from subtraction is positive, or it could be negative, right? So if I say that the answer is positive, it means that this figure was greater than this figure, right? So that means that our estimate was more than what was actually required, right? So we say that it was over applied. Over applied. And usually this over applied is subtracted from cost of goods sold. Subtracted from cost of goods sold, because these costs, factory overhead costs, are added in work in process, like you've done the format, and you determine the cost of goods manufactured, and then you add the finished goods inventory, and then you find out the cost of goods sold. So if the cost of goods sold has more estimate, it would be estimated, it would be overestimated rather. So you have to subtract certain value, because this is not what was actually incurred, this was the estimate basis. So for instance, my estimate was $4,000, but I actually spent out of that $2,000. So they gave me funds for $4,000, and they said, okay, I am releasing funds to you, you can buy whatever you want. And when they gave $4,000 to me, and then I realized that, okay, I did not require as much stationery or supplies or equipment as I had originally thought, maybe because customer requirement was not that much, or the orders that were coming to me were of a different nature, or the quality was maybe, the quantity was not, and the quality were not what I expected them to be. Or perhaps the labor was at a cheaper rate, whatever the reason. There could be various reasons. Perhaps I received a discount from the store, from where I was getting my raw material. Or generally there's a deflation in the country. So in this case, or it could be that my requirement was less. So whatever reason there is, it means that my actual was lesser than this. So that means I overstated my cost of goods sold initially, because my applied factory overhead, that is estimated expenditure, that I proposed that it would be this much, it did not come as 4,000, in fact it was 2,000. So that means that 2,000 was, overstated in this cost, so I would subtract the 2,000, that is, if the answer is positive in this case. However, if it is negative, then it will be underapplied. As you can see from this name, underapplied means understated. So that means if something is the factory overhead applied, especially if applied factory overhead is understated, it means that perhaps I had ordered for $2,000 worth of stationery, or maybe I had asked for funds for, let's say, funds for goods worth $2,000, whereas I actually fell short of stationery, fell short of goods that I needed, and my actual expense came to as $4,000. So I would require further $2,000, and then this means that I actually underestimated my actual factory overhead, which came as 4,000, and the value that I asked for, and I estimated as 2,000, whereas it came to about 4,000. So the answer would be 2,000 minus 4,000. The answer would be negative. So when it is negative, then you just add it in cost of goods sold. Okay, so this is going to be, this terminology is known as under or over applied factory overhead. Now in our question, as you can see, it states that factory overhead was applied at a rate of 100% of direct labor cost, leaving $2,000 under applied. Now since they have already given us the cost of goods sold, we don't have to bother with all the calculations, but I might tell you how to actually calculate certain things. But now, if you read what they say is leaving $2,000 under applied, that means the value is actually understated. I need to increase the value by $2,000. And this value would come to about $40,000. Now I'm going to be subtracting this $40,000, and I get $20,000 as the gross profit, okay? Now this is my gross profit, and then I can maybe subtract other things from this in order to find out the value. Now if you look at this, they say that underapplied that was closed in the account. Okay, so I have done this requirement. Okay, so now I've just added this. Now I know that this is my cost of goods sold, and this is very important for us because we need to find out what is the value of net income. Okay, so I'm going to be rubbing this off for now. Okay, so now for starters, what we have is, as I say, net income. In order to derive the net income, I need to find out the value of sales. First of all, we've done this. This is the gross profit. I'm just going to be writing the gross profit as this, which is $20,000. And you can just write here as net income. Rather, it's just income statement, sorry. Income statement for the year 2019, so on and so forth. Now, what we need is other expenses that we might have. So, we have certain marketing expenses. Okay, I'm not going to be taking the direct labor cost now because we need the direct labor costs because we want to find out the cost of goods sold. And they have given to us because we need to find out in detail this figure. Okay, we reached this figure through some calculation. They want us to do that previous calculation, but before that, if I want to find out the net income value, I would just take the shortcut, and the direct labor cost is not required at the moment, so I ignore that. Factory overhead is applied. I'm going to ignore that as well because I'm not required to find out my net income from direct labor costs. So be very careful in this. Do not do repetition in this. Okay, now total marketing and administrative expenses amounted to 10% and 15% respectively of the gross sales. What is the gross sales figure? This is $60,000 here. And I need to find out the marketing expense, which is 10,000. So now, marketing, these are the other expenses. You can just simply put a headline here, caption, other expenses. Now marketing, or these could be indirect expenses, and this is marketing expense. Which would be, now it's 10%, so 10% is $6,000, okay? So I just write here $6,000, and maybe in a bracket I can just put separately in rough work, okay? So rough work, you can just do maybe some column on the sides. I don't know, I'm not sure if the camera is covering. But you can just simply have the working 6,000 into 0.1, and you get 6,000. 60,000 into 0.1 is 6,000. Now you have administrative expenses. Okay, so now administrative expense comes to about 15% is respectively, that's what they've mentioned here. So now this is of the gross sales again, so now the gross sales is 60,000, and we know that 10% is 6,000. So we can find that 15% would be approximately 3,000 added to this, because it's going to be 10 plus 5. So if 10 is 6,000, so 5 would be approximately 3,000. So 6 plus 3 is 9,000. So administrative comes to about $9,000. Now how did I do that? So it's just 60,000 into 0.15. You can simply do it with the calculator. I just did it like that. Okay, so it's just 9,000. Now you know that 9 and 6 combined becomes 15,000. Okay, so this figure is $15,000. Right? And if you subtract this, the value comes to about $5,000. Now this is the value of net income, because they're not given as a taxes. I'm not going to be adding those. Okay, so now what you need to find out is the retained earnings statement. I hope that you've understood this entire thing. I'm not going to be rubbing it as yet. I need to, first of all, explain to you what is the retained earnings. They have given the condition now that the retained earnings account increased 50%, 50, okay? So it's increased. So if I don't know the retained earnings account, so I know that the value of retained earnings, let's just assume that retained earnings is actually, opening retained earnings comes to about X, because I don't know the value of retained earnings at the moment. And I say that any amount of net income that was included, because when you say that retained earnings increased, the only way the retained earnings can increase is through the net income, okay? So that means that if they say that there was a 50% increase, first of all, 50%, but I need to find out what is the value of X. So what is the 50% first of all? I need to find out what is the 50% retained earnings. So now X is the total retained earnings assumed, and I say that this is the 50% increase. I know now that the 50% increase is 5,000 the net income. This was net income, okay? So this is my net income. This is my retained earnings. And the condition is that the retained earnings account increased to 50%. It means that whatever this retained earnings account was, when it increased to 50%, there was net income added to it. That's why it increased 50%. So that means the 50% of this retained earnings, which is X, is equal to net income. Therefore, I can say that 5,000 by 0.5 comes to X, which is equal to $10,000. Now this is 5 by, actually this is, 0.5 is half. So you can just simply, if this is 0.5 is half, you can just take the 2 here and multiply this, find out as 10,000. Now, let's turn this off. Now I hope that you understand this concept. Let me just repeat this. Our opening retained earnings, not given to us. what they give to us is the values from which we calculate the net income, and they tell us that retained earnings account increased 50% due to the business. So the business is basically generating us and giving us profit. So whatever profit was, we added it to retained earnings and it increased 50%. So that 50% was actually net income. And then we find out the value of what was the opening retained earnings. Now I can actually find out what is the closing retained earnings to this. Okay. So now I've got rid of this. Okay, now so this is what they're saying is actually that opening retained earnings was $10,000 and we had net income, we had net income as $5,000. So now I need to find out if there's any dividend or not. No dividends were paid. So this is the second line. After the opening balance sheet, this is the second line. No dividends were paid during this year. Okay, so now I can simply state that dividends would be 0. No dividends were paid. Where? So you can't see that. No dividends were paid. So I'm just going to be subtracting 0 as symbolically. Okay. Therefore, now we have closing retained earnings as $15,000, and I can put this value in the balance sheet. Okay. Now assets, I don't know the value of cash. Again, it's an unknown. I can find out other things. Now they have given us some values. They have mentioned that accounts receivable, prepaid expenses, these are again assets, current liabilities and common stock were the same. So now I have to rub this, okay? Okay, so now cash is, since they have not mentioned about cash, that means automatically we have to find it out. Accounts receivable. Receivable was unchanged at $10,000. So this is actually balance sheet as at December 31st, 2019. We have finished goods. We have finished goods at, okay, now they have given us the opening finished goods value is $6,000. But if you see, they have in the adjustments they have mentioned that except for the finished goods inventory, which was reduced by 33.33. This 1 by 3 is actually 0.33. So I'm going to find out what that value comes to. So it's 1 by 3 plus 33, and it's actually 0.33, 333, and so on into opening. It is 2,000. So we reduce it by 2,000. So if let's suppose the opening inventory was $6,000, since they are telling us that it is reduced and 33.33%, it comes to about $2,000. So we are going to reduce it by $2,000 and comes to, this is 4,000. Okay, and what is this actually? This is 6,000 less $2,000, and this star is actually, this star is, oh sorry, here, this 0.333, so on into 6,000 comes to about 2,000, and it reduces, okay, reduce. Now we have work in process work in process is $2,000, and the condition that they've given us is inventories were reduced by 50%, including, now this inventory, this word is, that also includes work in process, because they have said inventories except for finished goods. That means the opening inventory of materials as well as the work in process, because that also includes or comprises of materials. So we have work in process, and that is reduced 50%, so it's $1,000 because it's given to us as $2,000 opening, and this opening is actually 2,000 into 0.5 is $1,000, okay, as per the condition given to us. Now what else we have? We have materials, $4,000. Materials. Now again we are going to be reducing it 50%, so this is going to be, instead of 4,000, it's going to be $2,000, which is actually 4,000 into 0.5, and it comes to $2,000. Okay. Now we have prepaid expenses. Well, the prepaid in this case is $500, and it's the same, it's untouched, as mentioned in the question. Then we have property, plant, and equipment as $30,000. Okay, so now they've mentioned this property, plant, and equipment is opening as $30,000, but now in the question they say that these were reduced by depreciation of $4,000. So I'm going to be, PPE would be reduced by 4,000 as 26,000, because these are actually 30,000, and you reduce it by depreciation, comes to about $26,000. Okay. Now retained earnings. Now this is equity part. I hope no, the current liabilities as yet haven't been written. So now the liabilities. This is just the asset part. Now we have the liabilities as current liabilities, and they are unchanged. Current liabilities as 17,500. You can also add these up. You can find out the values, but since we have 1x, so we can't really add up. So now what we're going to do is subtract all the values from these and figure out what the cash is. And we have common stock as 30,000 as given in the question to us, 30,000. And we also have okay, now the retained earnings. Now retained earnings as calculated as $15,000. It's going to be $15,000. Okay, so now first of all we're going to be adding all these and find out what's the value. Okay, so we know that this is equity is 45,000 and 45, and then you can just add 17,000. So let's just together add these values. So 45,000, and then we have the liabilities with us as 62. So all this comes to about $62,500, and we're going to be subtracting all these values, less 500, less 2,000, less 1,000. Less 4,000, less 10,000. And it comes to about 19,000. So now this is $19,000. Here we go. There you go. So now I found out the value of the unknown variable, which is x. Now since this question is very long and I have to cover other questions, one is, this is your task for the class, okay? This is not your assignment, remember this. This is the class task. I'm going to be putting it up on the LMS. What you're going to do is find out the net income. You have to find out from this, the second part of the question, okay? This was just the first part. So second part, is about net income. I have done the net income, but you need to find out, I've done this part of the second part, but you need to find out the manufacturing plus cost, the COGM basically. You need to find out the COGM leading to COGS. So that means the materials, and out of this, there is something which is missing, purchases. They have not given to you purchases. So you need to find out this value by the reverse method. So you write down the format, direct material opening plus purchases as X, okay? And then you, just the way I have done with the balance sheet, just go back, find out the value of X. Similarly, you do it for here as well, that you have direct material opening plus purchases as X. Then you have, that is direct material available for sale. Then you subtract the closing, but then you won't write any figures in this, okay? So you're just going to leave that as blank. Keep going down. So it's direct material opening plus X comes to direct material available for use, less closing, whatever value is given to you for direct material is direct material used, plus factory overhead. In this case, factory overhead, so there's also direct labor, sorry. The direct labor would be $9,000 and factory overhead would be 100% of direct labor applied is $9,000. And then you're going to be, okay, so there are no utilities, okay? Then you add, these are manufacturing costs for you. There's a factory overhead, the direct labor, and let me just find out if there's any indirect labor. I don't think so. So let's just leave that. But you are going to add the factory depreciation. In this case, this was 3 by 4. So of the value of the total depreciation, so this is going to be about $3,000. And you add these up. Then with opening work in process, you write the value of opening work in process, and you get the cost of goods, this is the manufacturing cost accounted for, and you subtract the work in process closing, and you get cost of goods manufactured. Then you have the cost of goods sold when you add the opening finished goods, and less the closing finished goods. So you have cost of goods sold. Now you already know the value of cost of goods sold as $40,000. And in this case, since you have not put the underapplied, so you just stick with the 38,000 that you have calculated at the moment. You are not going to use the 2,000. Just go stick with the 38,000. Put the 2,000, add it as 40,000. Okay. Now keep going back. So 38,000, you have cost of goods sold, and you can find out the values. So for instance, if you have direct material opening, add X, and you have available for sale, this is going to be some X value, less closing. So closing would be direct material used, okay? So all these values would be left blank till the time you reach the cost of goods sold. So once you reach the cost of goods sold, then you can find out the value of, the accounted for, cost of goods accounted for. You can just keep on going in the reverse fashion. And I hope that you can do this. If you have any problems, you can ask me in the class next week. Let's just go for another question quickly. This is chapter 3 with page 59. And I'm going to be talking about fire loss questions. It's going to be something different. Okay, so now if I read this question, it's when your inventory gets burned. And you need to find out what was the value of the things that were actually burnt in fire. What do you do? Then you're going to be proceeding with what was the closing left. Okay, and this is in the same fashion. We have Robidox products. A small manufacturing company produces a highly flammable cleaning fluid. since it was inflammatory. So it burnt some of the stuff in the factory. Now on page 60 they say that after the fire, a physical inventory was taken. And the materials were valued at $30,000. So this is closing, remember this. This is valued, what was left is valued. So this is closing value. The materials were valued at $30,000. The finished goods at $60,000. And supplies. What is required first of all is this. They want you to find out the value of work in process inventory lost by fire, okay. So that means they have given us the closing finished goods, closing materials, but they have not given us the value of closing work in process. So we need to find out what is the value of work in process. In other words, we don't have this value, but we have materials as 30,000 and we have finished goods closing. These are the closing values. Finished goods as $60,000. Okay. Now, what they state is that the inventories, opening inventory. Now, when they say inventories on January 1st, it automatically means opening inventory, right? So, what we are going to find out is what was the total cost and what was sold out of that. So once you have total manufacturing product cost and then you subtract what was out of it, in other words, total manufacturing cost and out of that you subtract cost of goods sold and you get closing. Rather, what you do is usually you close, you subtract the closing and you get the cost of goods sold, like closing work in process, closing finished goods, right? So in this case, when you subtract the cost of goods sold instead of closing, you get the closing. So just like left hand side is equal to right hand side. Similarly, opening plus purchases less closing is cost of goods sold or material use or whatever. Similarly, for cost of goods sold, if you are subtracting the closing, you get cost of goods sold, but if you subtract the cost of goods sold, you get the closing. Now the question is, what is the value of cost of goods sold? Because it is unknown to us at the moment. What we need to figure out is what is the manufacturing cost, and then we take an estimate of how we're supposed to find out the cost of goods sold. But for that, we need to know the formula. So the basic structure is, let me just rub this up. So the basic structure would be sales. Okay, now, you know the formula is sales less, which is whatever the sales value is, less cost of goods sold. Usually is gross profit. In the question, they've given us the gross profit, and they've given us sales, and we need to find out what this is. This is given to us. This is given to us indirectly. Given indirectly. Now what does that mean? It means that they have given us a review of the accounts showed that the sales and gross profit for the last 5 years were. So they have given us for the last 5 years, not months, okay? So for the last 5 years, they have given us, if you go back 5 years, so this was 2020, and I'm talking about 2019, so just go back 5 years, you get to 2014, okay? Or if you include the 2019, then 19 and 18, 17, 16, 15, till 2015. So for this year and the last previous years, you can find out the value of, okay, so now they've gone on A, B, C, D, E. Okay, so they are not including 2019 in this case, because they have given us for F, 2019 or F. So, and they have given us in question the last 5 years A, B, C, D, E. So I'm going to be looking at 2014. So let's just assume that for the last 5 years, including 2014, 15, 16, 17, 18, the trend of the sales was as given in the question. Sales were 300,000, 320, 330, 250, and 280. And then for gross profit, similarly, they've given us a trend. What I'm going to be finding out is adding them up, and so I just add. What I'm going to be doing is adding sales, okay, so this is adding sales, dividing by n. This is going to be summation of gross profit A, B, C, D, E by n, okay? It's A to E. Then just find out what is the average value. So, first of all, I'll just add up the sales. So it's 300,000, 300 plus 320, plus 330, plus 250, plus 280, by 5. I guess, no, sorry, this is 300 plus 320, 330, plus 250, plus 280. Comes to 1480 divided by 5, comes to 296. So now that means that this comes to 296,000 dollars. These are the average sales. Now the average gross profit in this case would be how much? Let's just add this up. 86,200, so it's 86,200 plus 102, 400 plus 108, 900 plus 62,500 plus 84,000. And you get 444,000 by 5, 88,800. Okay, so this is as 88,800. I'm going to be subtracting this from the sales. You get 207,200. So this is going to be, so this is 207,200. So this is just the value of x is equal to this in this case. Right? So now you can find out this is the value of gross cost of goods sold. I'm going to be placing it here. So this is 207,200. Now what is the manufacturing cost? Okay, they have given us finished goods, $70,000. Finished goods, $70,000. Work in process, opening. Okay, this is just opening. Work in process is $50,000. Then we have materials as $15,000. And I'm not going to be including supplies because supplies are assets and they're not costs really. And then when they're used up, they convert into expenses. Supplies are excluded, and just add them up, including with this is okay, I'm sorry, in this there is a mistake. For the for this, they have already given us the sales for 150,000. So these are just the average sales. I'm just going to be including this $150,000, okay? The average sales, you're just going to be writing here. Okay, so what was the value? Was 295 is 6,000, okay? Sorry, that was my mistake. For the cost of goods sold, actually we already have the sales figure. but this value, the gross profit, is to be found out by the average worth of the sales, okay? So at the moment I'm not going to be including the sales, which was the average, since they have given us the sales for the first 5 months. This will be just 150,000. Instead, we are going to be using the average sales to find out the gross profit rate. What is the rate, okay? So now if the average sales, if you divide the average sales by the average gross profit, oh no, it's the other way around. Average gross profit is 88,800 by the average sales to 96,000. That's 30%, approximately 30% gross profit rate. So now this is 30%. I find out what is the value of 30%. This is 45,000. Okay, so let me just repeat. My bad. I didn't see this figure. In the question they have given us the value of sales as $150,000. I just place it from the question. I calculated the average sales as 296,000. I place it here. I calculated the average gross profit. I place it here. And how did I find this out? Just add the sales figures of the last 5 years by 5. Just divide by 5. Add the gross profit for the last 5 years, divide by 5. Then you take the percent, in order to find out what was the rate of gross profit, because we need to find out the cost of goods sold. Then using this sales figure, I'm going to find out the cost of goods sold by determining the percentage of the gross profit. So in this case, I figure out that for the average gross profit of the last 5 years, it was 30%. How? Dividing the gross profit average by average sales, and I get the average rate as 30%. Now this percent I multiply with this, 150,000, and I get 45,000. So now I get this 45,000, and this is, I have to naturally subtract something from 150,000, okay? So obviously it's something which was missing is 105,000, probably this is the cost of goods sold, and you subtract this, just subtract from 150,000 and you get 105,000, okay? So this 105,000 was actually the cost of goods sold. I'm going to be placing it here. No. This is correct. Now what else do I need to put? Material purchases were $50,000. Purchases $50,000. Freight was $5,000. I'm going to be adding the freight. $5,000. Direct labor was $40,000. $40,000. And factory overhead was 50% of direct labor. So 50% direct labor is $20,000. This FOH. This was 50%. So you just add these up now. Okay? And these come to 70,000 plus 50,000 plus 15,000 is 135. Then you add purchases. Further, that was included, this was the opening, and then whatever you did during the period, you purchased some more. You added the 5,000 and you added the labor, which is 40,000. And then the factory overhead, which was 20,000. And you get 250,000, okay? So this is all $250,000. Now you can subtract the cost of goods sold, which was 105,000. So now you get approximately $145,000. This is the closing inventory. Okay, so this is closing inventory. Now, I mentioned that out of the total inventory that is closing, so where was it given to us? Yes, here. So out of this 145,000 is the closing, and we subtract the 90,000. And we find that the work in process in this case is $55,000, and this was the value of X that is so needed. This question is done. Let me just recap for you. When goods are lost by fire, usually you need to find out what was the value of closing inventory, because whatever was burnt, we need to find out what was burnt, or what is the value of the inventory which is left. It depends on the question what they're asking. Is what was the worth of the things that were burned. It depends on what was the actual cost of the goods and what was sold. So when you have all the costs of the opening plus what was purchased during this year, then you subtract what was sold. Obviously, what was sold was not burnt. It was sold. So you subtract what was sold and you get the closing inventory. Out of that now, this figure was not given to us directly, the cost of goods sold. Then we needed to find out the value of cost of goods sold through sales. I actually proceeded with the average sales figure, but the sales figure was given to us, so now I replaced that with the sales figure given to us. Okay? And this was 150,000. Now I needed to know what was the cost of goods sold, and I did not have it. I also did not have the gross profit with me. So I needed to find out what was the average percentage of gross profit, and in this case, they gave us the last 5 years gross profit and the last 5 years sales. I put one in the numerator, the other in the denominator, and with the help of the divisor, I found out that the value was 30%. This was the average gross profit percentage. I multiplied with this to find out the gross profit. And then I subtracted this value from this value, and I got this, cost of goods sold. And this I plugged in here. And then I found out that from the total manufacturing costs, these were the total manufacturing costs. Okay, these are manufacturing costs. You get the closing inventory, because when you subtract the closing, you get the cost of goods sold usually. So because it's opening materials plus purchases, less closing is used. Add work in process accounted for, less work in process cost of goods manufactured. Add opening finished goods available for sale, less closing finished goods is cost of goods sold. So anything which is subtracted as closing gives you the cost of goods sold. And then out of this closing total, they told you that we know the value of the materials, closing materials, we know the value of closing finished goods. These are given to you in the question. But we do not know the value of the work in process. How do you find out? From this total, this closing inventory includes the work in process, the finished goods, and the materials. So when you subtract from this B and C, you can find out the value of A. Or Y or Z, you can find out the value of X. This is how this question is done. And I will conclude my lecture here with the assignment in the 2-7 question, the working that you have to do for net income, and try to do the exercise questions. This is the class task, and you can ask me questions, revert to me, any problems that you might have in the next class. Thank you so much.